This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is May 4th, 2021, and this is show number 259. Well, Nick, markets this morning a little tepid today, huh?
Yeah, we're looking at some morning weakness, and it actually started before the opening bell. The futures were lower. There was a lot of pressure right out of the gate today. And the technology stocks, they are leading the decline. The NASDAQ right now is down 2.25%. And really, the selling has not let up in technology. So that's pretty important. And the decline in general is pretty broad-based today. So we're seeing a lot of different equities and a lot of different industry groups coming under some pressure. So that'll be important. And most important will be the volume by the end of the day. So we'll see how we finish. You never know how they open them. It's really how they close them. And secondly, you have to look at the volume trends. Right now, volume is upticking decently. So there's a chance, we got some volume in play today.
Wow, that would be unusual because this has been such a tepid market for months now, Nick, and this has been a bull market that everybody hates.
Yeah, it has been. But, Kerry, if you remember, I was going back. I thought we would see a little bit of a January dip. Then I thought a mid-February dip. And then I was looking for March decline around that equinox. And I have to say, the market was saved there, and I really believe it was saved for the most part because of that Archegos hedge fund blowup. And we saw a really, really good decline. But just going into the weekend, right before that announcement that Archegos Capital was going under, and you saw Credit Suisse and Nomura and Morgan Stanley and a bunch of others. They all lost a ton of money on that hedge fund due to the leverage. They saved that market, and that was really the shot in the arm that put these markets to new highs. But it was just a nominal high. It wasn't an explosive breakout high, and that should always have everybody on the cautious side.
So if I might paraphrase you, these markets are on borrowed time.
No, the clock has been ticking, sure. The clock has been ticking, and it's still ticking. Volume will tell us. We get high volume, then, obviously we have a top in place. But if we don't, then, they could prop them back up again. But I think everybody should be, cautious going forward. There's no doubt about it. I've been waving the yellow flag to my membership for 3 months now.
Hey, and we look at the earnings, and Amazon is falling again. Apple got hit after unbelievable earnings, and that's got to send you a message.
That's right. And we'll talk about Amazon first. Amazon gapped up big after its earnings. And it rolled over, and it's still rolling over today. It's down over 2% today. And, you're talking about a stock that went to $35.50. And, I'll tell you exactly where it went. The high there was $35.54. Now it's trading at $33.14. And Apple's another one. Apple's down over 3% today, a $4 decline. And, that's a pretty big drop. The stock is about to break its 100-day moving average today. So that's pretty important as well.
Really, it's going to break its 100-day moving average, which in and of itself doesn't mean anything. But in light of the other factors, it could be significant.
Yeah, and I think it's kind of significant, too, for another reason, is that Apple has been going sideways. Even when it tried to break out after earnings, it still remained in its sideways base. And today, a close today will take away that sideways base. It'll be a failed pattern.
And you could argue Apple being the largest stock by market cap, every decade you have a bellwether stock, right?
Absolutely.
Back in the 60s, I think it was IBM. In the 70s, I don't remember who it was, but maybe
General Motors at one point, right? GM.
Right. Yeah, so there's always a bellwether.
General Electric, remember, as GE goes, so goes the market.
Right, and Microsoft, Boeing at one time. And arguably, Amazon and Apple are the bellwethers. So when something happens to them to undercut their strength, you really got to stand up and take notice, don't you?
Absolutely. And these are not just regular stocks. These stocks have trillion-dollar market caps. I think close to $2 trillion market cap. So These are what we call mega caps now. And that's something that we have never seen before, where these mega cap stocks kind of dictate the entire market action, because a fair case could be made back when the FANG stocks were really just holding up the market, basically 4 or 5 companies. So you have to watch these mega cap names. And something else I'm seeing today that's really, really a problem is the semiconductors. Semiconductors are getting absolutely slaughtered. And the SMH down 2.6%, but a lot of individual semiconductors are getting absolutely taken to the woodshed today. And that should be watched closely.
Hey, all this is kind of inevitable. The tree does not grow to the sky. The old Benjamin Graham, I'm sure it's been around since the beginning of time, that thing, which is why you always need to take profits regardless what. My thing was where I really lost big, and I didn't lose because I still had a lot of gains, but I didn't get out when I knew I should have, was in gold and silver in 2011, because I just assumed the dollar was going to collapse and gold and silver were going to be the currencies. So, don't even think about it. And then we all know what happens. We had a 7-8 year depression in precious metals and in mining stocks. So, to think that it can't happen here is really kind of naive.
Yeah, you always have to be prepared that anything that goes up and has a parabolic run eventually will come back down. And to the point in gold and silver, they ran, basically from 1999 till, 2011. That was a tremendous rally with one real correction in there in 2008. That was it. You had about a 9-month correction and then a resuming move. So, when you get those kind of parabolic moves, you have to be careful. But I'll give the listeners one tidbit of how I knew gold was topping out at that point in time. JP Morgan upgraded gold to, I think, $3,000 an ounce or $2,600 an ounce the day before it peaked. And whenever I see upgrades by institutions at extreme highs, I'm always very, very cautious that that's going to be a false move.
All right. And speaking of gold and silver, gold is now in the black or the green, I should say, on the spot market. Silver down a little bit.
Yeah, today we have gold futures, which were a little bit weaker overnight. We're a little bit weaker this morning. Now up $2 on the day. I mean, it's a sensational run, still looking very, very strong. And then you have silver actually positive right now in silver futures, trading right around $27 an ounce, just up 3 cents, but nonetheless positive. And, that's the market's way of talking to us right now. Gold and silver are very, very strong. I did take profits today on my GDX call options. I was in that equity for about 4 trading days and, made 29%. So I'll be looking to reload on that play again on any pullback.
And as we know from gold, there's no way it's going to go straight up. Not like some cryptos we've been watching, that's for sure.
Yeah, gold just doesn't do that. It's very technical, which I love. We could find the resistance points just like 10 days ago. We said it was into resistance, needed to consolidate. Now it's back up to that old high, makes a little bit more consolidation. We should surge through to new highs here for gold. So far it's been really, really good. And it's been, quite the rally from that double bottom that we had in late March.
Hey, and that's a real interesting thing here. So Bitcoin, we've got 2 charts. They're in the show notes and they're on the YouTube graphic as you watch it, if you can watch it. And one is 2017, the run up to 2017 and what happened after. And that is a weekly chart. And then there's the current run up of 2021. What can we learn from this chart here, Nick?
Well, you're going to see that the parabolic patterns are in place for both. In 2017, late 2017, we had that big run in Bitcoin, and obviously it collapsed all the way back down, retraced 80-something percent. This time around, that was a weekly chart in 2017. This time around, we're looking at the same pattern, but it's a monthly chart. And if that same pattern plays out, that's going to be quite the sell-off for Bitcoin. So I would be very, very cautious. If you use charts, you may want to take a look at that one. I think it'll give you a lot of information of potentially what can happen.
Hey, and like you said, even Elon Musk took profits in his Bitcoin crypto holdings, right?
That's right. And it just goes to show you, as you hear these people on television talk about cryptos to the moon, $1 million per coin. I mean, I've heard the most extreme numbers. I almost cringe every time I hear it, but I chuckle too, because I say, wow, they're just going to bait everybody in. And that's what markets do. Guys talk their book. Then when they go up and they seem to take profits. Elon Musk looks like he did the same thing.
Yeah. Hey, and there's nothing wrong with talking your book either. There really isn't. But
there isn't.
You have to be honest about it, transparent.
Yeah. And they're just, they're excited about it and people jump on board. But, there's always a time to take profits. Like you said, that one time that you didn't do it, right? You could have made a lot more money in 2011 had you taken those profits.
Oh, for sure. And I can't kick myself in the ass about it. But, I bought into the fact that dollar was going to collapse and gold and silver would go to infinity. And infinity is like, it's a big number, infinity.
It's a very big number, and it doesn't exist because it's so large, right? We never know where infinity is.
Yeah, well, the Fed is trying to define that now with their money printing, but basically, no, we don't know what infinity is, but we keep getting a taste of it, right?
Yeah, you do keep getting a taste of it. We're getting a taste of the highest debt the U.S. has ever incurred in the shortest amount of time. That we're getting a taste of, and we're going to get more samples of that soon. So get your taste buds. I hope your taste buds are ready for that.
Hey, so the interesting thing is going to be, and I have a theory of what's going to happen if Bitcoin hits its peak and crashes. I believe that Ethereum is going to become the leader. Bitcoin, not so much, because the technology behind Ethereum is better than Bitcoin. Speed of transactions, all that good stuff.
I mean, right now, Ethereum has been the hot player. So everybody, while they look at the cryptos, they're always looking at Ethereum now. I mean, it's probably talked about just as much as Bitcoin lately. And, we have to take note of that. Maybe that is going to be the new crypto.
I think so.
When that goes parabolic, the same thing's going to happen, though.
And it has gone parabolic. And on my meager holdings of Ethereum, I'm up 20%. It's nothing. It's not meaningful money. I'm just doing it for the sake of because if I don't have money on cryptos, I have zero interest in them. It's kind of like when you're watching that football game between Seattle and Cleveland. It's like, unless you're betting on that game and you're from New York or Florida, you couldn't care less about it. So you got to have a bet on there just so you can be a little enthusiastic and care about the outcome of the game, or not the outcome of the game, but the outcome of your bet.
Yeah, so you want to have a little skin in the game and little chips on the table there. I understand it. For me, as a chartist, though, I only want to be in something that I have the odds in my favor of making money. And in all fairness, I don't trade Bitcoin or Ethereum, but I will tell you this, I see these patterns repeat themselves over and over and over again, and that's what they do. And that's why being a chartist has been a profitable endeavor. But the honest truth is when you see parabolic moves, just be cautious with them.
Yeah. Cautions, which means, what does caution mean? It isn't like, wait for the signal from up above that you should sell. Caution means take profits when you have them, even if they're not as much as you might like them to be, but take profits when they exist. And if you have massive profits, then
I'll give you an example. I love gold and gold miners right now, but I took my gold miner profit off the table today because it was a really good move, and I saw that we have a troublesome market and we're into some resistance. It's just that simple. I mean, it doesn't mean I don't like it going forward or believe it's going to go higher. I just know I probably got a shot at getting it back a little bit cheaper.
Hey, we got to get past 1,800. That's kind of the promised land. And until we hit 1800 and break it with authority, means breaking it like $20 in one day. So the price goes up to $18.15 or $18.20 an ounce. Till we get that breakthrough, we're probably going to see some pullbacks, maybe minor ones. I mean, if you see a 7-8% pullback, are you back in?
Oh, absolutely, absolutely.
And that would be, that'd be $50 or so. So it's not a lot of. Well,
I'm still holding gold right now. But I just got out of the gold miners today, and since I've gotten out of it, it has pulled back already. But that was just a technical resistance spot to take profits.
Yep. All right. Well, that is it for today. If you got any questions or comments for Nick, I will forward them off to him. Just send it to my personal email address, kl@kerrylutz.com. Go to inthemoneystocks.com. Sign up because the profits in gold are just beginning. And take a look at the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. Nick, we will catch up with you tomorrow.
Sounds good, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.